Hello everyone, so today I want to have a look at my $10,000 stock market portfolio. So if we have a look here, we can see my top is just in cash. So that is £4,423, which is roughly around $6,000, just a little bit over. And that is my top position at the moment. It's just in cash as I'm waiting for an opportunity to come around. I missed some stocks on the sort of December, January sort of crash you had there. Wish I put this money to use then, but I can't win them all, so I missed that one. The next one on the next list down is the actual stock, is the Royal Bank of Scotland Group. And I bought this one at about 231.69 per share. This current price is 268.80. So I have 431 shares in them at a PE of 19.76, which is quite high for a bank. I'm not sure if that's 100% accurate, that PE, which Bing has got from Bing Finance, but I'm up 16.02% on that, and I initiated this position in late November for a total value of £1,158, and if I remember correctly at the time I put in £998, including the dealer fees, which were about £12 at the time. So it also has a dividend yield of 4.76%, so on the 30th of April I'll be getting £55.15 from the Royal Bank of Scotland Group. So we see here, this is RBS. So I invested around here, the early point of December, end of November here-ish sort of time, so about 230, 229 here. So it did drop a little lower, and obviously that hurt a little bit first. I lost nearly 10% of my investment there, but I held it out, and now we're up obviously 16% now, which is fantastic, especially with that dividend yield as well, which I'm going to reinvest straight into more RBS shares on a DRIP, which is a dividend reinvestment program, which I've set up with my broker. I have it to just reinvest straight away into the shares. So hopefully that will, obviously, the snowball effect of that, when you reinvest your shares and reinvest dividends in shares, the next time you get a dividend, you get more dividends, and then so on, you buy more shares, and so on. So over the long haul, hopefully that will keep going. Now, Brexit might hurt RBS's share price. Nobody knows exactly how that's going to affect it. I'm not going to pretend that I know exactly what's going to happen, but I can say that I'm going to be holding my RBS through Brexit. I'm not worried about holding RBS through Brexit. I don't think you should be massively worried either about doing that. If you do hold some of these bank stocks, I don't think they're a terrible buy, because to be honest, Royal Bank of Scotland isn't going anywhere. The only issue I do see with Royal Bank of Scotland is the government's ownership in Royal Bank of Scotland. But again, the RBS board are aware of this, and they are talking about and trying to put forward measures to lower this level of ownership by the UK government. So if we look at my next position, this is AXA WF Framlington, which is a fund. So I purchased that at 119.09. Its current price is 128.19. 789 shares in that, with a gain of 7.64% for a total value of just over £1,000, and a dividend of £37.49, which isn't too bad. And this is one of the first positions I initiated when I reconfigured the portfolio back in around end of October to the start of November. So all of these gains you're seeing here are the very earliest is the start of November, but many of the positions are later, such as Royal Bank of Scotland and some other stocks that I'm going to talk about in a minute. So this one, if we have a look at the fund, which this is, I do like this fund a lot. So here, if we have a look at the top 10 holdings of the fund, it has GlaxoSmithKline, which is a pharmaceutical company, Diageo, which is a massive beverage company. It has things such as London Stock Exchange, British Petroleum, which is obviously says here, oil and gas producer. You have Whitbread, and here if we go down a little bit further, it tells us where this fund is invested. So its largest percentage is in financials, being 19.4%. And then after that you have industrial, at 19.09%, and then you have healthcare at 15.59% for UK equities. It has some international equities, but if we see here at the top, it is a majority UK equities, being 89.83% UK equities in this. So look at the geographical analysis of the stock. You can see it's 91.12% UK equities, 4% developed Europe, and 1.66% North America. So it is a very heavy UK fund, but I do trust AXA, and the companies it's invested in I like a lot, and essentially it's a very cheap fund to hold. So if you look at this as the people I invest with, it's a 0% initial charge and then 0.58% net ongoing charge, which isn't cheap, but it's not too expensive, especially when I can get in and out of the fund with no costs. When compared to shares, I pay £12 in, £12 out minimum with no foreign exchange fee. So it's probably levels out around the same for holding a fund versus holding just a share. So the next stock I want to look at is Aurora Cannabis, and this is one of my biggest gains. So I bought it when it was $10.24 a share, including all of my fees, which to buy a Canadian stock were quite a lot. Being in the UK, I had to pay commissions, FX trading fees, all those sorts of things. So it definitely added up buying this share, but you can see here it was definitely worth it. 25.29% gain, and that was initiated this year, about a month ago, around that time. So it's now worth 3,220 Canadian dollars, and it converted value is 1,836. And obviously it doesn't have a dividend yield yet, as Aurora is a growing company. They reinvest most of their money into themselves, and they don't actually have a profit at the moment, which is one of the reasons this is a bit of a strange pick for me. This is not a usual sort of, doesn't tick the boxes of a company that I would generally invest in. However, I do like Aurora, and I do think Aurora is going to be the winner in the cannabis market, although Canopy is making some great partnerships, so we'll see about that one. But yeah, I'm confident with Aurora for now. If we have a look at their stock price over the last few months, we can have a look and see. So if we have a look here from when they went public in October 2016, we have this drop here down to about 7 Canadian dollars in December 24th, around the end of December. That was when most of the market was sort of falling down. But I invested around this point here, so the start of March. I think mine was more actually here, the end of February, middle of February, end of February time. And now you can see we are reaching sort of one of these peaks again. So whether we're going to go back into a trough a little bit, I don't know. I don't think so. But this stock is so volatile. I try not to look at this one too often because it can be so up, it can be so down. It's nice to see at the moment it being up 25%, but just as easily that can go again. So they can go just as quickly with this stock. So I think that's something to be wary of if you're going to purchase this stock. But for now, I'm very happy with how this is going. So let's move on to the next one. So that was my Hargreaves Lansdown account. If we now look at my Freetrade account, which I just opened, it is 61% Micron Technology, which I own 2 shares of Micron at $39.34 a piece, and they are now at a current price of $39.54. So that is a gain of 0.51%, so nothing massive there. But this is just a portfolio that I put £100 in just to test out Freetrade and their trades, and I'll have a video coming up about that soon, about their instant trades and their free trades and all those sorts of things, and I'll be having a detailed video on Freetrade coming up soon. But this is a portfolio I'm looking to expand, but it's only just been started, and I'm considering transferring some of my cash from Hargreaves Lansdown, depending on how all these trials go with Freetrade. But for now, it is looking promising with Freetrade. So that's my overview of the portfolio, all the individual stocks. If we have a look at my overall gain loss, so my total gain loss is 16.32%. I have a total of £8,520 invested, which works out to $11,309. But I invested $7,844. Sorry, so that's a total gain of £675 or $886 in about 5 months since this portfolio was reconfigured. So I'm very happy with that. For 5 months, 16.3% growth overall in the portfolio. I can't complain about that at all, really. So I hope you like this video. I hope you found it interesting just to see someone else's portfolio, see someone else's point of view on these stocks, and maybe got an idea for your own. I have a video soon coming out about analysis of Micron, which is the stock I invested in with Freetrade. I also have a video coming out soon about my more of an in-depth overview of Freetrade. I did an overview of Freetrade, just talking about what the app was and how to get started in Freetrade, but I'm going to have a video coming out soon, about actually putting in trades with Freetrade, researching stocks, all those sorts of things. So if you're not subscribed already, now is a great time to do that. Make sure, if you are subscribed, make sure you're hitting that bell icon, make sure you're liking the video, commenting down below. I'd love to chat to all of you. As you can see in my previous videos, I always reply straight away to everybody. I love talking to you guys, talking to you about investing, talking to you about where you invest, what's your favorite investments, who you invest with. I'm just fascinated to learn more about what you guys do and how you invest your money. So thank you very much for watching, and I will see you all in the next one.